What's happening, y'all? I'm gonna give it a few minutes. David having some technical issues getting on, but I appreciate you guys for coming and check us out. This is another one of those things that was just born out of a, Facebook inbox conversation. So we decided to bring the conversation to you guys, the public. And of course, this isn't any type of investment advice. None of that. What's up, Shatavia? It's not investment advice or anything like that. What's up, David?
What's happening? What's happening?
Not much. Just going over some ground rules with the people. So this isn't any type of investment advice or anything like that. We really do this stuff because we enjoy it. Um, None of the companies that we'll talk about in this presentation are any type of uh, basically, we're not telling you to go invest in any of these companies. We're just going to present the companies and our opinions on those companies. So keep that in mind. Definitely do your own due diligence when it comes to the things that we discuss in this video. So anyway, welcome everybody. I'm Lance Hamilton, as you know, of BH Capital Enterprises and High Tech Options. David, you can introduce yourself.
How y'all doing? I'm David Chandler from Grinder Mind Trading. Nice to meet y'all tonight. For those of you who I haven't met.
All right. So David and I, we met some years ago. We really connected on cannabis investing. So we used to share ideas and just chop it up about the cannabis industry some years back. And then David was like, one day he hit me up. He was like, yo, I got to go take care of some stuff. I'm going to take a break from this social media stuff and I'll be back. He's like, I'll hit you up when I come back. Like what, 3 years went by? So yeah, a couple years went by and he hopped in my inbox like, yo, what's up? You remember me? And so we connected on this chart stuff. So that's been all she wrote since then, yo. So like I was telling you guys, this whole presentation was born out of me and David just chopping it up in the inbox about opportunities born out of the current economic situation that we see going on in the world. So we decided, hey, let's do this. Let's do this live and mark up some charts and stuff. So thank you all for coming and engaging. We appreciate y'all. So the title of this presentation is Bang for Your Buck. All right, so the reason that we're talking about this, or the purpose of this discussion, is we want to demonstrate basically how you can use your working knowledge of basic economics to help find opportunities in the markets and to discuss the why behind these opportunities and then to understand the narrative that influences the trade or investment. And then of course, we're going to do a technical breakdown of some relevant tickers. All right, so some questions to think about. And this is, you know, when you question your own knowledge base when it comes to basic economics, even if you're not like a intermediate or even very experienced in the markets, you still have a working knowledge of basic economics. And it just starts with asking yourself simple questions. All of us have seen how our pockets have been affected, how our lives have been affected since COVID, since, you know, inflation has gotten out of control, supply chain issues, all of that stuff. So some questions that you can ask yourself is, you know, what's currently happening, not only in the world, but also here at home. And it's having a direct impact on me. Like pretty much all of these things are having some sort of impact on us, whether it be, you know, something that you view as positive or something that you view as negative. And then, of course, are there any opportunities presented from this information? And then how can I benefit? So, you know, as traders and or investors, we're always thinking about how can we take advantage of, you know, whatever it is that's going on in the world. Do you want to add anything to that, David?
Nah, exactly. That's exactly what I was talking to a guy the other day about the same thing, about the fundamentals and technicals, and how more I lean into a technical with my teaching, but because I feel that even with your basic knowledge and fundamentals, you kind of can understand how certain things are shifting. And if you get a little push or a little help from the market side, from such people such as ourselves, you can kind of make a conscious decision on what you should look for, not only just investments, but just look for what goods and services for just your everyday living. So yeah.
Exactly. I agree. All right, so events and opportunities. Post pandemic again, we've seen how people were able to sit home and stack. So just an unprecedented opportunity to save money. I mean, from rents and mortgages being deferred to people working multiple jobs from home, full-time jobs, and stacking money, people paying cash for homes. We've seen it all. Of course, the rising cost of goods and services, like David just mentioned, rising interest rates, and more. But what we're mainly going to focus on during this conversation is the strengthening US dollar and how that can have an impact or really present some opportunities in the markets. So we know that with a strengthening dollar, things are more expensive here at home. However, you go overseas somewhere, the power of your dollar may be magnified due to foreign exchange rates. So, for example, the US dollar versus the Chinese yen is 6.7. So, basically, what that means is for every dollar that I have, if I were in China using their currency, my dollar would be multiplied by 6.7. So, $1 is 6.7 of their currency. So, also activities, like what type of activities do people like to do? Just in general, some people, they like to go and eat, some people they just like to go and see sights, but you got a big number of people that love to gamble. So gambling is a big deal here and abroad, which is why we chose the sector of the industry, or the industry that we chose to talk about, which is travel. So, although the cost of living is higher domestically, like I said, this presents opportunities for living and or traveling abroad. So we've seen a lot of people that have been packing up and moving to other countries where they can basically where their money will stretch a bit more. So one thing that you can also do is, when you're looking for opportunities, is use the foreign exchange rate to find a location. So, for example, I probably wouldn't want to move to like Europe because the US dollar is not necessarily a stronger currency there. So I just be it'd be like a lateral promotion, no raise, no nothing. But if I go somewhere like Mexico, China, Japan, my dollar is going to stretch a lot more than it will here at home. And so when you guys travel, what are some reasons that y'all travel? And what are some activities that y'all like to do when y'all travel, whether it's traveling out of the country or whether you're traveling here at home? What are some of your favorite activities?
I think for me, I think it's two type of travelers, right? You
Hmm.
got the overworked traveler who just want to get out and go and lay on the beach and be lazy and get drinks
Right,
served.
for sure.
Then you got the traveler who then got an excess amount of cash and they want to go out and spend a little money and travel. So they want to be a
Hmm.
combination. For me, I'm more of a lax traveler. I want to go and be lazy and chill.
Yeah.
I may not spend no money when I travel. My money was spent to get here. So
Right,
I
right.
spend my money to get there. So, but for when I get there, for me, I like to lay back. For me, I don't know about you or y'all.
Yeah, I'm definitely. What's up, Corey? I'm definitely the lazy traveler too. It's not often that I take a trip and I have an itinerary. Like I tell my wife all the time, I like to go into hotels and watch TV.
Yo,
Literally.
tell her, I'm gonna go get her. I'm gonna need you to tell her the same thing, right? We got a list. It be broken in
Oh
sections.
nah, nah. That
Yeah,
would drive me wild. I can't. Nah, I want to sit down. Like if we got a list, let it be a list of good restaurants. That's about it.
that's it. Yeah, it's,
So once you find a location, um, is there anything special about the location that you're considering? And so one location that we decided to look into was Macau, China. Now I'm probably butchering the name, but
Macau, not cool. Say it however you see it. I'm just saying.
right, right. And so number one, the one thing that's special about this place is that it's the only place in mainland China where gambling is legal. It's also a top global destination for gaming and casinos, like top as in Vegas, almost Vegas status. And then, is there any tourism data that you can access just to look at the numbers when you're doing your research? Now, this is from like an investment and or trading perspective. Oh, we got some comments here. All right, so Shatavia says she likes restaurants and sightseeing. I like a little bit of sightseeing too. It depends on where I go though. Jose said dining and adventure. Yeah, Jose be all over the place with his camera.
Are you a photographer too, Jose? Don't let me find out. I'm gonna need you to
Yeah,
be.
man, he be out there with the camera, bird watching and stuff.
Oh, he bird watching. Okay.
Yeah.
He made it there. Get your piece, brother.
Mm-hmm. Christiana, what's up? She just want to hit the water wherever she goes and have a nice view. Just peace. I feel you. I feel you. So you probably like a lazy traveler a little bit, like we are.
Yep.
All right, Mario traveling for adventure. So Mario got the itinerary.
Yeah, I can tell. You see how you put the LOL behind it? Yeah, he one of them. He one
Yeah,
of
I
them.
remember. I remember we all met up in Vegas. It was like back in 2018. He was telling me about all this stuff that I could be doing, and I was just like, man, I ain't got time. I don't have time. I'm just eat.
Right. I'm just go and get big.
Right. All right. Corey said he'd be all over the place, so he'd be a little itinerary status too. Mike said, "Oh, excursion packages." Mike, I can't even lie. We went on a cruise. We did an excursion package, and it was fun. But that junk can be tiring, and I like to be chilling and being lazy on vacation because I can't do that much at home. All right. Fred said, "I'm just checking for the gym and good eats."
Yeah.
But the
Gym
wife
rat.
has a whole itinerary. Yeah.
He creeping out and going off into the gym while she over there trying to get stuff done. Yeah, I got you.
All right, Russell said climbing up pyramids in Central America. We got to make that a thing, Russell. Like, I definitely want to go for sure. That's a bucket list thing for me.
Climbing up pyramids. What you mean?
Yeah,
Like
man.
rapping like with ropes and all that?
Yeah, man.
Oh, see, I'm country, but see, we ain't climbing no mountains over here, Russell. Shit.
Christiana said it depends on who I go with though. Girls trip is different from a couples trip, and different from a bar trip, and different from a solo trip. Okay, all right, okay, I get it.
Word.
Fred said I don't want to need a vacation from the vacation when I get back. Right,
Come on.
Exactly.
Can't drive back, can't fly back. You can't make it. Just dead.
Be tired, man.
Yeah, I get
Be
that.
tired. What's up, Chris? Appreciate you hopping on with us.
Oh yeah, what's happening?
All right, so furthermore, what are some risks that can impact your narrative? So basically, our narrative is that there's some opportunity especially as a trader in the travel industry with the US dollar being strong, and that's travel abroad. So then what you want to do is locate some of the major companies that are established in that region that cater to specific activities. So with Macau being a major gambling hub, naturally we wanted to research some companies that have some exposure in Macau. And so let's talk about some types of risk. So you have market risk. The two of the main types are market risk and non-systematic risk. So systematic risks are types of risks that impact the entire market. It doesn't matter if you sell water bottles or if you give out loans, you're going to be impacted by this risk. And that's interest rates, things like recession, natural disaster, exchange rates, like we just talked about. And then those systematic risks are risks that are specific to like an industry or a company. Something like, hey, a competitor just entered this market, or like we'll talk about in a couple of minutes, the Macau gaming bill that was just released. Of course, that doesn't have an impact on the overall stock market. It's just impacting these companies that have exposure in this industry. So anything that can impact people's ability to move is going to be a risk, especially for this industry. And anything that can impact people's ability to spend is going to have an impact. That's really applies to any industry, really. But also consider events that can impact the city of Las Vegas specifically. And keep in mind that some of these events can have a positive or negative impact on the company or an entire industry. So again, with the Macau gaming bill, and I think David's going to go into that a little bit later. One thing about that bill is that the government is incentivizing businesses to attract more foreign travelers to that area. So that's going to be an important piece of information to put in your back pocket and keep an eye on with the tourism numbers. Also, casino licensing. If a company can't get licensed, then they can't operate, and that's going to be a big impact on their top and bottom line. So, just a few things on risk to look out for. Did I miss anything, David?
No, that's pretty much everything as far as just the overall picture of it, what we should be looking at as far as the economics and things. Yeah, we're gonna dive into for how, like I say, I'm just gonna say my cool. I'm gonna go with my cool. My cool.
I'm with it.
My cool. That's it. That's the name. My cool. But nah, that's pretty much it. For us overall risk and what we looking at, leading into this here presentation.
Okay. All right.
Yeah, tourism. I actually, I don't mean to cut you off.
Go ahead. Go ahead.
I actually looked into some tourism. As far as speaking of spending, right? I want to speak about spending.
Mm-hmm.
Talking about tourism and spending. For us to rank, we know U.S. is up there for spending. We rank number one for spending. But the good thing about Maku, and even though we got this climate coming around Maku, it's ranked like 7th in overall spending, right, for its particular area. So it's top 10 for its spending. And then up until we got the headlines and the inflation and the interest rates, and even before the Ukraine war, between 2019 up until 2021, Maku was pretty much, they had consecutive years of tourism arrival, visitor arrival. So that was on the way up until all this stuff kind of happened. So there's kind of like some stuff I wanted to touch on before we speak on tourism. I seen tourism is just kind of triggered.
Yeah, and that aligns right with the numbers as well. Leading up into the pandemic, the number of travelers traveling to the Macau, Hong Kong area were increasing. So the gold bar represents travel to mainland China, and then the burgundy bars represent travel just to the Hong Kong, Macau area. So you can see that it was starting to really outpace travel to mainland China. So now it's, of course, it took a big dip with COVID, and it's still trying to gain some footing. But like I said, like I kind of touched on with the bill, the government wrote into the bill some ways to incentivize these companies to try to get some more people into the country to gamble and to stay and to spend some money, spend some of them foreign dollars. So definitely keep an eye on tourism information, and China does a pretty good job. There are some websites that, if anyone's interested, I can send to you, where you can track that data, because they do track it on looks like a quarterly basis and an annual basis. So let's talk about some companies and business segments. Um, and so you want to not only think about business segments, but you want to think about the breakdown in regional revenue for these companies when possible. So you got air and sea travel. And if you look at the tourism data, they keep track of who's traveling by air, who's traveling by sea, and who's traveling by land. So that's some important, stuff to keep in mind. Payment processing, because, most of us, when we travel, we're using cards. And of course, lodging and gaming, and, throw food in there too if you want to. But those are some of the major business segments that we looked into when we were researching this opportunity. And of course, there's some tickers that we have there. Air and sea travel, you got American Airlines, Delta, Carnival Cruise. Payment processing, you got American Express, Visa. Lodging and gaming, you got Las Vegas Sand, Wynn Hotels, and then MGM. And of course, this isn't like all the companies that have some exposure. These are just some examples. All right, so let's chat real quick about Las Vegas Sands. So, of course, as the name would imply, Las Vegas Sands is mainly, it was born pretty much out of Las Vegas. Pandemic hit. Really, they started to diversify out of Vegas well before the pandemic, but the pandemic hit and it just tore up their numbers. It really did. But if you look at the numbers from 2020 to 2021, what you see is that they're starting to recover. Not like recovering to where numbers are back in the black or anything like that, but you're seeing a progression of improvement. So that's something that you definitely want to see when you're researching any type of company from a fundamental perspective. So that was something that, I was looking at with LVS, and something that I noticed when I was looking over their numbers. So one thing that's very, very important about LVS is that a little over 60% of their revenues are generated in Macau. So that was surprising and insane to me. That's a huge risk. And really anything coming out of China that impacts this industry could spell some volatility for this company. We know volatility means there's some trading opportunity there. So the volatility could be in the share price, but it could also be some volatility in their financials, as we've seen when you look at the trend in their numbers. Like I said, they were diversifying out of Las Vegas. Now they're starting to focus on emerging markets. I think like maybe 20 something percent of their revenues is in Singapore. So looks like they're really focusing on Asian countries right now, as it seems the US market is a little tapped out as far as growth is concerned. And anytime you are dealing with companies that have operations in China, there's always going to be significant political risk. Always. And I'd even take the risk in saying that pretty much any type of news coming out of China that could possibly negatively impact foreign countries doing operations there can have some impact on this company, whether it be one of those knee-jerk type headlines or whether it be something that has a real material impact on the company. So again, pay close attention to financials as well as other economic and political developments with U.S. and China mainly. That's pretty much it with LVS. David, I'm gonna let you take the floor with Win. Just let me know when you want me to change the slide or whatever.
Okay. Well, yeah, that's the thing about when I was looking at my cool and investments over there, kind of followed the paper trail, the businesses and who over there. When I realized that Las Vegas Sands and Wynn had so much invested over there, it threw me. I'm like, damn. When I realized for Wynn as well, Wynn has over 50% of their revenue coming out of my cool.
Mm-hmm.
So with that, I was like, okay, well, if that's the case, anything that shakes China can shake Wynn. But the good thing about Wynn as far as the financials, they have the financial health to sustain right through this political climate. They have about 10 billion in debt, but you know they can. I feel they can manage that. And for us to finance, I think they can withstand.
Mm-hmm.
But they want the outcome in China to play over pretty quickly. They want to get COVID. China has a zero COVID policy, right? Is
Mm-hmm.
no cases, no COVID period, and they just had a big testing over at Marcool. That kind of forced them to kind of scale back too and shut down some things. But
Yeah.
you know, China wants, Hong Kong wants the casino business open because when they did have the big outbreak, they shut everything down but the casinos, right?
Mm-hmm.
So they want the money coming in because all of the revenue is coming from that casino. 80% of the revenue, I think, is coming from those casinos. I think it's like 6 operators over there on the Maku side, and it's all coming from the casino. And
That's
so with
crazy.
Win, you're right. 80% of your revenue is coming from casinos. So with Win, true enough, they taking this big hit now due to the revenue because of lack of tourism, lack of people being able allowed to let in. But as soon as they get this under control and you get people rolling in, I think those numbers will start to progress. Oh, same as LVS and MGM as well.
Mm-hmm.
Um,
That's
yeah, I'm gonna say you can go to the next slide.
okay.
I wanted to. You mentioned the gaming bill tax. It was a big gaming bill. Everybody waiting on with since for the last year with Win, and everybody speculated it's gonna be good, it's gonna be bad. A lot of people were saying some of the sentiment was around Michael was that with this bill, it was going to pretty much disintegrate them. It's going to be hard for them to recover. And I was like, okay, well, let me go and look into it, see what's the damage. And then usually, when you get the government say, okay, we want to play ball, but y'all got to be regulated. More than likely, it's kind of like a good thing. For the company, they may be mad because they got to go through loops and hurdles and paperwork and licensing and all that good stuff. But from an overall perspective, okay, the government want to play ball. Yeah, they finna take some money out of your pockets, but it's probably a good thing as far as consistency, as far as staying available and staying around. So they passed the gaming law, I think in June last month, right? Last month they passed it.
Yeah.
It wasn't that bad as people thought. People thought they were going to raise the tax up tremendously, but they only gave 1% raise on the game, just 1%. And for us, just overall, what they got, they even got them to the point that where they said they're gonna penalize. This is how, if you look at it, the twist on it, right? One of the penalties that they can be penalized for is underperforming revenue that threaten national security. So you gotta make money. That's what you cannot underperform. You have to make money, or if you do, it's a threat to national security.
That's
So,
nuts.
come on, like they want to play ball. So I think they gotta get COVID under wraps. Once COVID get under wraps, and mainland China open its doors and allow them to come over and spend some money, tourism pick up. Places like Wynn. Now, far as the opening, in my opinion, far as the opening, if China opens, right? Now we understand that the dollar's strong, so we want tourism, of course, including from us and China. But there's a lot of business, a lot of big bettors come from China over to gamble in Michael.
Mm-hmm.
So from a trading perspective, or from our perspective on the win side, we can say, well, if that's the case, win revenue should start to make some progression, start to turn, because you get revenues, you get tourism. Maybe not a lot from over here yet until we kind of get the green light to go travel over there. But nevertheless, we got the money to go and do it. If they lift the restrictions, they allow people to come in. Then I think for the trading side, win could be probably something you probably can look at for long term.
Mm-hmm. Yeah, I definitely agree with you there, especially looking at these charts over the past few days and stuff. So,
Yeah.
all right. So pretty much to sum it up, even in the midst of a recession, there's opportunity, whether it be here or abroad, and it can be short term with trading, or it can be long term with investing. A strong dollar is highly beneficial for traveling to other countries as your buying power can be magnified depending on the country. We touched on that before. And there are companies that cater to travelers worldwide, and people are always traveling globally, always. And beware of the risk that with investing in or trading in companies in this industry, given its recent volatility concerning the pandemic and other geopolitical events. So they're not out of hot water yet in terms of these specific risks with the pandemic, political risks. I don't think they'll ever be out of hot water with political, but at least if the pandemic, once the pandemic is behind us, then I think that's probably going to take the top off these companies, honestly. Because I mean, I ain't gonna say they're too big to fail, but these companies are well-established companies that are just going through a rough patch right now, in my opinion. They're not going anywhere. Like you said, 80% of their revenues in Macau are generated from gambling, and people are always going to gamble, right. Whether they're broke, whether they're rich. People love to gamble, so that in and of itself spells opportunity. So Mike was asking, wasn't LVS trying to sell some of its operations? Mike, I don't know. I'll have to look into that. Do you know any specifics on what business segments it was trying to sell? Chastity popped in. What's up, Chaz? Thanks for joining us.
What up, Chaz?
All right, so let's dive into some charts, man. And of course, if there are any, tickers that y'all like for us to check out, feel free to throw them in the chat. But I'm gonna start it off with LVS.
LVS.
I gotta. All right. Let me know. Y'all can see my screen.
Yep.
My thinkorswim. All right. Okay. So anybody that knows me, when I do my top-down analysis, I always start with the highest time frame and work myself in. Especially if even if it's not my first time looking at a company, but if it's been a while, then I'm gonna check out. I'm gonna start with that yearly chart. So I've already started to mark this one up, but I'm gonna go through pretty much, what I see. Let me add my volume on here.
That's the only thing I don't like about TradingView. This is the only pet peeve I got, right? I don't think they have a yearly chart.
Oh, really? Oh, yeah. I noticed that today when I was looking. All right, so it's okay. It's tripping on the volume. Whatever. All right, so what you can see here with this yearly chart is that it's been trading in a range for a good while. Biggest things that I noticed is this big pop up to the all-time high. Of course, this big bearish candle in 2008, and just this overall range that it's been trading in for the past several years. So far, it's sitting in a historical demand zone. It's been holding at this low 30 to high 20s area. It's too early in the year to tell, or to forecast whether this area is going to continue to hold. All I can do is partially rely on what has happened in the past. And what has happened in the past is that buyers tend to come in around this $27 to $32 area and buy it. But they only buy it to a certain extent, right? And then they sell it once it gets up into this like $50, $60 area. So it's just kind of trading up and down for the past several years. Even with COVID, COVID didn't cause this yearly chart to break structure or anything like that. So there wasn't any type of sentiment change on its yearly chart with what happened with the global pandemic and stuff like that. So However, we do have over the past 3 years a series of lower highs and some slightly lower lows as well. So maybe some things are starting to change, but again, it'll take a while for us to be able to really see that. When I do a yearly chart, I tend to look at, especially with COVID having happened, 2020 is going to be an important year for me with my analysis. So I mark the closing price of 2020, the low. Sometimes I do the high and the open. It just depends on where those levels are in relation to its current share price. So I have 2020 close marked on this one, and I have 2020's low, and I also have 2021's close because right now that is resistance or major resistance as far as the yearly chart is concerned. And then I have about the mid mark between the open and close of 2008 mark. That's not real significant right now because the share price is trading some ways away from that, but still that's going to be significant at some point. As that's low key, that's the area above that is supply. Um, let's do the monthly chart. All right, so what I'm seeing on the monthly chart is you see this these peaks right here. You got lower lows or lower highs, I'm sorry, and lower lows on this monthly chart. And we got a falling wedge happening right here. Now, a falling wedge is typically a bullish pattern, but not always. So pretty much what I'm gonna look for is for the price to breach either the upper trend line of this pattern or the lower trend line of this pattern. And again, you see how this little light yellowish rectangle that I drew here represents demand zone. So you can better see how buyers typically really come in this area. So far over the past, several months, every time it gets inside this area, buyers step in. So for me, if I were looking at this, I probably set some sort of alert inside this area, and then every time that alert goes off, I probably just buy some, go 30 days out or so and buy some calls. Not investment advice or anything like that. Of course, I'm just telling you guys what I would probably do in that instance. And right now, the price has pretty much been wedged between the lows of 2020 and the close of 2021. So about 33 to 37, 38-ish is where it's been mostly trading for the past 3.5 months, probably. So pretty tight range, but if I were trading like some weeklies or something like that, there will likely be some opportunity there. So volume is kind of showing that neither bulls nor bears are in control right now. And you can see that as evidenced here on the chart with the price kind of trading flat over the past few months. Volatility is pretty tight on this one. So one thing I could expect in the near future is some volatility to come into the markets, or maybe this industry specifically, and cause resolution of this pattern, whether it be a breakout or a breakdown. Of course, it can also just consolidate right past this trend line, but either way, I'm looking for some resolution no later than September, October for this company. So matter of fact, I'm gonna just go ahead and set my alerts right here. So this will be an actual trade that I may, look out for in the future. And I'm getting a lot more comfy and cozy with alerts because they allow you to watch charts without actually watching them. Okay, so breakout.
I ain't gonna hold you. I'm so rusty with Think or Swim. It's a shame. I just hit. I go. I find my contract. I hit the button. I set my stop. I hit send.
That's how I look about like how you probably look on
Oh,
TradingView though.
TradingView.
Yeah, man. I'm like they need to let me look at a whole lot of crypto on Thinkorswim because I would leave TradingView alone. All right, so got my follow wedge breakout, and then follow wedge breakdown. All right, so I really think that if the falling wedge breaks down, then this share price will likely go below 30, in my opinion. But if it breaks out, I'd be looking for the price to go to 37, maybe higher. But with that being such a significant level, for me, let's say it broke out at 35, I'd probably do like a short trade, maybe even like, well, I don't even know if it'd be safe to do a whole bag. Probably like a couple of weeks and get like that 2 point move. But I probably would not risk holding it past this 37.64 target. It'd be a situation where that'd be my first that'd be my first target, take profit, and once that level holds, then I consider another move or another position up over 40. But I think with the fundamental stuff going on in the world that's impacting this company, um, it's just not really safe to risk holding past such key levels. Um, Let me see, is there anything else I see on this monthly chart? I'm gonna scale out a little bit. 20 years. So you can, I mean, you could just see the range really. Um, let me draw a bigger. So I mean, pretty much right there is your range. And like I said, even when it comes down to in the lower end of this range, I wouldn't be holding past some of these key levels. And notice that in previous years, it really didn't have a whole lot of issue getting up toward the top end of this range. And once it broke above this 43, 44 area, it held for a while up until, um, let me see, up until last year. And so last year is really when things started to change. And now it's kind of situated more toward the lower end of this range. So, like I said, I would just focus on if I were, trading this company, I would just be focusing on these lower end targets. I wouldn't even be worried about what's going on up here until it's time to worry about what's going on up there. So, um, weekly chart, see the same thing, that falling wedge situation happening. You can see all these wicks down here below this monthly level here, but you can see pretty much where every time the price hit this lower blue trend line, it has a nice little bounce. So for me, that presents some opportunity. So we got some buyers here toward the lower end of this trend line, and we got sellers up here. So one of my favorite things to do is just to play a range, because you already know where the buyers and sellers are, and it's just a matter of disciplining yourself to buy with the buyers and sell with the sellers. And we know that a lot of retail traders do the opposite. It's crazy when you think about it, but that's what we tend to do. Something hits a demand zone, and we trying to sell into buying. And we're not the ones that move the market. So you want to understand where the institutions are buying. You want to buy with them because they gonna move the market. So you can take advantage of that momentum. So drawing trend lines and identifying supply and demand allows you to see uh, where you got that institutional buying and selling, and you could just position yourself accordingly. set you an alert and just chill, or move on to something else. Um, so yeah, I probably won't go much lower than maybe a daily chart on this one. Let me look at the implied volatility on this thing. All right, so looks like it's, hold on, get a price level on this thing. It's okay, so looks like it's trading more toward the higher end of its volatility, historical volatility usually. Um, for me, I do the same thing with indicators. Is I will draw support and resistance on those as well. So one of my rules in my trading governance is if the implied volatility is too high, I'm not buying calls. That's another thing that I see, or mistake that I see the traders make, is buying when implied volatility is not in their favor. Let me see what their IV rank is right quick. Hold on, I have to look over here. All right, so IV percentile is 40%. So they're about midway between where they usually are in terms of implied volatility. So not super high, still some opportunity to the upside, but also some opportunity to the downside. So they're headed toward that 50-50 area in terms of its implied volatility. So for me, when I'm looking to get into a stock, whether bullish or bearish, implied volatility is one of the first things that I check. Because if I check LVS and I see it trading toward the lower range of its implied volatility, then most likely I'm looking to go bullish on that position, because we know that with rising implied volatility, that increases the pricing of the option premium, which is exactly where I want to be. But if you catch yourself trying to buy calls when it's up toward the higher end of its implied volatility, that premium is most likely not going to move in your favor. So that's just a quick little part of my analysis that I do when I pull up a daily chart on a company. So like I said, they're about midway between where their implied volatility is historically, but more upside right now.
Chris asks, what's high and low in regards to IV?
So it varies by company, but generally the way that you rank and imply volatility and determine whether it's high or low is to look at the IV rank or IV percentile. So if you pull up a company and their implied volatility is, maybe say it's 10%. That doesn't tell you anything. You might think, oh, that's low, and then go jump in some calls just based off that information and get clobbered. It's definitely possible. It's happened to probably all of us at one point. What you fail to look at is that maybe the IV rank was at 100%. So what that tells you is that 100% of the time for that ticker, its implied volatility is lower than 10%. So that's telling you that implied volatility is high. So what we know that when implied volatility is high, there's a higher probability of it dropping. And we know the impact, the pain behind the IV crush. It's like we physically feel the crush if we're on the wrong side of it. And so on the flip side, you can have a company that you look at their implied volatility and it's 100%, and you thinking, oh, that's high. But you might look at their IV rank and it could be like 25%. So the IV rank is the number that tells you whether that implied volatility for that ticker that you're looking at is high or low. So generally, below 50 is low. And for me, probably anywhere between 45 to 55, 60 is neutral. And then anything over 50 is considered you're getting toward the higher end of implied volatility. So you always have to study the IV rank to know whether or not the implied volatility is high or low. And then you can get into some advanced strategies that allow you to take advantage of that, but we're not going to get into that right now. But that's it's a lot more to options than just trading a call or a put. But there are a lot of strategies that allow you to take advantage of movements in implied volatility. But for now, when you are doing your research and maybe you have a bullish narrative fundamentally for a company, go check the implied volatility. And I will caution you against jumping in calls for a company whose implied volatility is high. And one of my rules is if the implied volatility rank, I'm sorry, if the IV rank is especially for a swing, if the IV rank is over like 85%, I'm not touching it as far as calls is concerned. That's generally, if it's like a day trade and there's some sort of catalyst that came out that day or something like that, or the day before, then I might try to squeeze some money out of it. But for the most part, if that implied volatility is high, you want to be selling. You want to be selling a position. So collecting some premium because that allows you to take advantage of that IV drop. So yeah, hopefully, Chris, that answered your question. Take a look at the 4 hour right quick and see. Um, 4 hour. 4 hour looking like. Why is my? Okay, there we go. So we got a slight uptrend over the past, what's that, since May, about mid-May. It's been setting some higher lows. So, I pay attention to that. And so far, it's been holding above 2020's low. So I already talked about how significant that level is. And recently, it's been holding that level. So it's getting ready to start to be wedged between this 2020 low and this monthly level that I drew on the monthly chart. So like I said, something's brewing maybe in terms of price action. Maybe some sort of news is coming, in the not too distant future. But it should be working itself out in the near future. So far it looks like the IV has been kind of pulling back a little bit, which is what you would want to see if you were looking to go bullish on this stock, or whether it's a stock or options. So for me personally, I'd like to see this IV drop some more. Probably drop down to where the IV rank is more 30, maybe a little below 30, something like that. That's what I would like to see. But we'll see. So key levels again, 2020 low, which is about $33.30. 2021 close, which is $37.64. This little demand zone, historical demand zone, in the probably about 27 to about, I say about $32 area. Really below 2020 low is demand. And those are the more significant levels that are relevant right now. But once that 37.64 level breaks, then I'd be looking at like the low 40s area. And then after that, about mid 40s. Let's see. So that's pretty much all I got for LVS. Anything that you see, David, that I might have missed?
Nah, I actually let you rock with LVS. I actually looked at Win and American Express.
Okay. All right. So I'm gonna stop sharing my screen and
Okay. Um, I was gonna look at when and and the reason I'm looking at American Express because we touched on in the presentation about global payment systems, and I was talking to Lance earlier about American Express and Visa, which is one of the more popular ones, right?
Mm-hmm.
And we talking about China. If we tying everything into China with Win and LVS and MGM. Also, you want to look at as far as a investment, maybe a trade review, just to look at over time. You know, like you said, Lance, you say September, October for maybe LVS, looking for a move to happen, maybe some catalysts to come out. So if you tie that into everything else, we kind of can weave all these together, kind of sorta, right?
Mm-hmm.
So with American Express, in China, if we talking about the relationship with China and type of businesses over there, uh, China, their payment system they use is mainly Alipay. I forgot the other one, and Union Pay.
Mm-hmm.
Union Pay is one of the bigger ones over there, right? And so we talking about global payment systems in China and American Express and Visa. Union Pay has overtook Visa as far as payments overall, right? So we know for us from a competitive standpoint, well, who will Union Pay probably have to compete with on the American side, who doing business over there? That would be American Express. And why would that be the case? Is because for over the last year or so, American Express has been building a relationship with China. They even spent 8 months over there building a network for like 14 million merchants over in China. So that tells you that off the top that slowly but surely American Express is building relations in China. So therefore, any political risk that may come from China may not significantly now because they're not really heavy over there, but it
Mm-hmm.
could hurt them a little bit or it could, teeter totter against them or with them. So that's why I decided to throw in American Express. But Win was inside. I wanted to share Win. I'm gonna share my screen here. Um, let's see. Let me know y'all can see it.
Yeah, we can see it.
All right, cool. When was looking at it, and if you probably gonna already see what Lance just showed with LVS, they look pretty much similar
Yep.
as far as chart wise. And this particular point for me here in 2018 is significant because this is around the time the CEO I think went through his trouble with the whole Trump administration, and they were calling him an agent for China and all
Mm-hmm.
that. And of course, the catalyst aligned with the technicals and we get this double top and roll over. So we've been making lower lows for the last 4 years now with Win. But if you just look at the pattern, of course, we do see a little support here. 2020 again, 2020 significant year, of course, for a lot of stocks being with COVID and stuff of that nature. So looking at 2020, of course, we get '09, and you will see with any stock from '07 to '09 probably will look somewhat similar to this. So here's support I see with Win from a per trading perspective. We just looking at the overall look at this as a catalyst for the upcoming 2022 year. Do I think he can get to $14 a share? I don't think he can get that low. Don't, I don't think we can get that damn low. I'm maybe here. I give it, 35, 36 bucks a share, but even so, somewhere up in here, I think this pattern will complete or this climax here in this leg will complete. And we already so overextended. We've been selling off, what's this, since 2021, of
Mm-hmm.
last summer, basically, since last summer. So almost a year now, Win has been taking decline. Like we said, we went through the presentation. That makes sense because, the fundamentals tell us, if they 50% to 60% of their revenue is based off of China and
Mm-hmm.
tourism. And you see here in 2019, this 2020, that's when it started taking a turn when you were trying to see that price was moving up, along with the revenue that was coming in from over there until COVID and things of that nature. And you see where on the fundamental side and on the technical side, how it aligned and
Mm-hmm.
prices are still aligning with what we already talked about tonight. So what we could see here is probably some bottoms again, possibly, and pricing may start the bottom out here, maybe around 35 bucks a share. And this is, like I said, it's just a monthly chart. So if we talk a long term, this is why, yeah, we probably want to stay within these time frames. So, we're seeing that we talking about per trading from a trader perspective. yeah, it'll be the same type of setup. I will be, look at it for maybe some calls if you want to look at the IV and compare that with a possible pattern. This is the monthly chart, so it could play out between here and ending this level long term. As far as we talking about price action, this last year. So, for us win, this is the overall range I see. If you even were to try to play it from a trading perspective, right? So I'm
Mm-hmm.
123 by 37. That's a big ass range,
Yeah.
to play. So there's a lot of opportunity to either side. But I will notate just with price and along with the current fundamentals, I'll still notate each area of pullbacks for its price, for its trading opportunity. So I like to walk my way up a chart. So if I was to play that, I just use this as a intermediate range from 35 to 99, and even still, that's a big range
Mm-hmm.
with the monthly chart from a long term perspective. So long term is still somewhat still bullish. I'm sorry, bearish. But
Mm-hmm.
clearly, we see a bottom here. I mean, all day long. And you can kind of look to see what happens here between this level. As far as the trend goes, um, I see a climax here, another little flag here, and then we're on the next climax. So this leg probably is about finished. So either leg and
Mm-hmm.
pull back in the second leg. So right now, for us a trading opportunity, I see none. I can just watch it though, and I just watch it
Mm-hmm.
in this entire area. But short term from a weekly standpoint, I do like this little pin bar right here that happened on the 21st of last month, but still with another good follow through. So
Right.
weekly perspective, still nothing yet for us trades. Um, he's okay. He go a little bottom here. Yeah, that's the 49 bottom. So uh, here on the daily. So from a swing perspective, I don't see anything that's look appetizing
Mm-hmm.
overall. So, but I would still watch it. If I was to break the daily down, I would now break that range down to 50 by 63. Now, that's a more playable range. I like that one a little bit better.
Yeah.
10-point range. But even so, it's such a short term op. You will have to be careful within this whole area. It
Yeah.
might be a situation where it may be a entered and an exited next day or two, depending
Mm-hmm.
on how wind moves.
Yeah.
So that's what I see on wind. We got some brewing. We got some brewing between here, but not enough yet to really be comfortable with any position, whether upside or downside. Honestly,
Yeah.
especially right now. So I'll just wait on wind, but I still see opportunity in it. Just gotta let it play out and
Mm-hmm.
present itself. Like I said, maybe some here, maybe a hole here, but like I said, it's a small op. So um,
Yeah.
that's what I see on win for us now. So 50 by 63 is what I'm looking at short term. And then any break of out of way of this level, then we can look for a real clear direction.
Mm-hmm.
Of, so that's what I got with win. Kind of look the same as LVS. I didn't do MGM, but I'm not gonna break it down. I'm just gonna look at it just since all on tie together. This is what I got on MGM, and they pull back, and this at the cusp of a ascending triangle or the wedge bounce. So all these plays you probably tying together, MGM, win, how it's looking. You kind of can wait for some possible setups, and
Mm-hmm.
then lastly, American Express. Oh yeah, there we go. American Express. American Express just off the strength of China, and how the type of impact that it may have against them or with them with China. So from a monetary perspective, I just was to do it. I see some breakout point and support here around 123, and I'll just keep that level there in mind, just as
Yeah.
a trade perspective. And walk that down from the weekly. Hold on, let me keep that line showing on all of them, so I had to keep drawing it in the weeks. Yeah, we go. Yeah, and here, so we got a breakout point. We got a gap here, but we got a ways to go. So still clear the support here. And then
Mm-hmm.
long term, I'll just draw this range here and just keep it here and see how it acts within it. 123 by 200, but nevertheless, just the first climax down. So it can go chop it, it can go range man, it can pick a boo, Still, I don't see nothing yet here. A lot with American Express, besides maybe here. Honestly, now, fine. If we was talking about short-term trades, we could see what ASP does next week if it holds above 140.
Mm-hmm.
Possibly could get some out of it and maybe play back, at least back to here, but
Mm-hmm.
149. So we're talking about now maybe 8 points in it, somewhere up in there. So it's not out of the money. AXP can do that within a 2 week expiration on it, maybe,
Mm-hmm.
and try that just from a short term perspective, purely. But long term wise, we know what we talking about with all these companies, and we looking for the political climate to kind of turn in our favor and see what we can get. So that's about all I got for is my charts.
All right. Okay. So just to add to that, one of the major things to look out for, and something I'll probably be looking out for in the news is COVID restrictions in Macau.
Mm,
I think that any piece of news coming out, um, and really the news to look for right now for bulls is, are restrictions lifted? Because right now they're going through, some COVID cases at casinos and stuff like that. So naturally, nobody's wanting to buy these stocks right now.
right.
But some news coming out in the near future about, that whole situation turning around can present some volatility in these share prices and present some opportunities to grab some quick little swing trades and things like that. So definitely something that I'll be looking out for in the near future, or listening out for in the news.
I think China had started. They had. I looked on the website and just to see what the travel restriction of Macau. I think they have a level 3 yellow alert. I think whatever the COVID alert thing system is. I think it's a
Hmm.
code 3 for Macau, which is moderate.
Hmm.
China has closed off their border for a while, but now they're kind of starting to lift some restrictions. They went from, except for a 3 week quarantine, on a 10-day quarantine. So they kind of showing some lenience to opening it up. Also, just in closing, just to throw this out there for us, risks with China, and I don't know which way they may go with this. As far as like we're talking about economic information, China has made the announcement. They said, even though we don't understand 80% of revenue comes from casinos, they have said that they are trying to diversify where their revenue comes from. Now, how would they do that? How would they get any pushback? Would it be, how easy would it be with 80% of revenue coming from casinos? How quickly and how successful will you be in your diversification? You're gonna have a lot of resistance with that. You want to diversify. So that's another thing. They want to diversify, look elsewhere. They already prohibited online tutoring and things of that nature. So they're trying to figure out where they're gonna put their foot next. So they'll probably be wise to trying to understand where they may go, and it could lead to another opportunity on our side for as an investment or even a trading opportunity.
Yeah, I think now, although it's illegal there, I
Mm.
think eventually they may have to open that up, especially if things continue the way they have been with COVID. But we'll see. But this whole diversifying away from gambling is not necessarily the best narrative for bulls.
Right.
So I think bulls will be looking for grasping for any type of bullish straw, whether it be a long or a short straw. And I think one of those straws could be, all right, we're gonna let y'all do some online gambling. But on the flip side of that is, it kind of begs the question: how would online gambling affect these companies that a big part of their revenue is people physically being in seats and people physically being in their beds?
Right.
So that's just something that to ponder as well.
Ooh.
All right, let me hit some of these comments. Chad says, I appreciate y'all for this. Hey, we appreciate you being here, pulling up and chopping it up with us. Miss Phoenix says, what about the ski industry, specifically Vail resorts? Um, does Does Vail operate outside of the United States? I'm not sure, but Vail, pretty much anything that could impact people's ability to travel and people's ability to spend is going to have a negative impact on Vail. I haven't even looked at Vail in a month of Sundays, to be honest with you. I used to look at that one when I first started trading. Oh man, hold on. I'm gonna pull up this chart right quick. So this mug has an ugly yearly candle, just straight selling.
Yeah, I
Yeah,
see that. They've been selling out for a whole almost a big year in November, right? Yeah.
yeah, yeah. But really, when you think about it from just a purely technical perspective, the fact that it had like this exponential move for several years,
Yeah.
it's only right that it goes into it starts to kind of chop around now. Um,
Yeah, it took
let's
off.
see.
For what? This is the last 11 years. Damn.
Yeah. So really, it's really just kind of ranging right now. It's this isn't a situation where at least from what I could tell right now, it's not really a situation where sentiment has changed or anything like that. At least not from a technical perspective. I'd have to look to see what's going on with this company this year that's different from COVID or 2021. Like this mug just hit this supply zone above 330 and just sold off hard.
Mm.
Probably just recession stuff would be my guess, but again, I'd have to kind of dig into that. But for now, as far as the yearly chart is concerned, it's mostly trading between this 330 and about 180s range. And again, with it being a yearly chart, it takes a longer time for this whole stuff to develop and play out. But it's just kind of trading flat right now, which is nothing nothing that would concern me just looking at the chart. But in looking at this outlier candle, this 2022 candle, that has piqued my interest a little bit. But you can see here on the monthly chart how it's just kind of oscillating between the low and the high end of the range. So if I were considering a trade or anything, um, I think I want to say Vail is slightly volatile, not super duper volatile, but it does have a little volatility with it. But it's not something that I personally would probably day trade. I probably just, look at some swing opportunities. Um, so, one of the things that I look at when something is ranging is how long does it typically take this company to get from the low end of the range to about the mid level of the range and even to the lower end of the range. So you can see that it takes several weeks when it hits this 330s area. It takes several weeks to even get down to like the middle of the range, was around this 250 260s area. And it just kind of chops around a little bit when it gets there. And then you can see where it's kind of breaking now. So maybe it's headed back below 200, maybe. But again, this is probably not something that I would day trade. I probably um, I probably uh, consider a move down below that 200 area. But like I said, Vail's not something that I look at too often, really at all. This is the first time I've looked at it in years. Um, Last time I looked at this company, it was high 200s, 300s, somewhere in there. So um, yeah, so risk with this company is pretty much anything that's going to impact people's ability to travel here. Um, Recession, So again, with the US dollar being strong, I think that people are going to be more, or at least travelers are going to be more inclined to travel abroad versus traveling domestically. So I think that these domestic companies will, or domestic travel companies will suffer to some extent because of that. But that's just my humble opinion. I could be wrong on that. Feel free to challenge me. Anybody, I don't. It don't matter. But yeah. So we got like a sort of semi bear flag situation happening here from the high. From looks like this was the all time high in 2021, where it wicked up on that yearly chart. Um, so looks like it may be starting to form the second leg of this pattern. So if that's the case, it definitely has some more downside to go. With that leg being about 130 points long. So um, if that's the case, this thing can go all the way to 100 maybe.
What's the
But
support
that's
on that left hand side? Is that on the below your range, below that range?
below the range. Hold on. Right here, that's
Yeah.
about 130s,
Okay.
about low 130, low to mid 130s. So yeah, if it is indeed a bear flag, this thing it's got some more downside potential.
Yeah, she said she just bought some fractured share because of the dividend payout. I just literally seen that too. They done that. That happened right as that happened 2 months before that top out when they announced
Okay,
that they were going to
okay,
start paying out dividends.
okay.
Yeah.
All right. I appreciate your comment, Miss Phoenix. Jose said we talking about enterprise risk, and his current week's homework is on enterprise risk. Hey man, that's dope. But I know in on your side it's probably harder, and I'd be stressed out. So I like to talk about it for fun. All right, what's up, Dontre? Thank you for joining us. Chat says, can we do a Thinkorswim desktop video? She's so rusty.
You and me both. Shit.
I, I'm with it. I'll put something out for you. No problem. Mike says, look like Macau based off LVS and Win are targeting travel companies with heavy debt, and it shows a decline quarter over quarter. I mean, yeah, pretty much any company that has gone into the pandemic carrying heavy debt has been suffering. And then you compound the whole quarantine stuff and shutting down whole industries, that just makes the whole situation worse than, just simply, uh, hey, we got some heavy debt and stuff like that. So, I mean, from what I looked at, the financials weren't too bad leading into 2022, or not 2022, but 2020. But once 2020 hit, everything went bad. Like it was like night and day almost with with these companies and a lot of companies. But
I don't know where she just went. I don't know what happened to Lance. She must have clicked herself out. There
my
she is.
bad, I kicked myself out.
I just said it. I just said
Yeah, but yeah. So and Mike, that's a I like your comment because it reminded me of just going back to one of the big reasons why we did this conversation. Just imagine knowing these things prior to COVID. You know what I'm saying? Knowing that these companies have heavy exposure in China. Pretty much the majority of their business is in China. And then having a situation where, yo, we got a pandemic coming out of China. That's that's like leap puts all day. Like I'm buying puts at every strike, at every damn expiration, and you just go make money on top of money. So just getting in the habit of keeping an eye on what's going on economically and politically in your home country and around the world, you'll learn to start seeing things before they actually happen. And us as chartists, we already know that the price action tells us shit before the news does. We see it all the time. We see it all the time, especially if it's a ticker that you watch on a regular basis. You can see and catch those subtle nuances that are like little outliers, and you're like, kind of like how in 2020, if you pull up like a monthly chart of SPX and SPY and things like that, you'll see, I want to say it was a shooting star that printed February of 2022 or 2020. I keep saying 2022. But if you look at the monthly chart for SPY and SPX, you'll see reversal patterns being printed at all-time highs, at the time, all-time highs. So they were being printed at resistance. And as a trader, you know, supply zone plus a reversal pattern, that's like getting toward high probability put story right there. You know what I'm saying? So just getting into the habit of researching a company from a fundamental perspective and thinking about looking into, where they get most of their money. And then once you have that information, you can kind of sort the news appropriately. So like, with LVS, if it was something happening that was just impacting, I don't know, South America, it wouldn't have as big of an impact on the company because they don't have a lot, they probably don't really have any exposure in South America. But just wanted to throw that little tidbit out there. All right, so we already answered Chris's question. Yeah, Chris, and listen, I should have told you that about the CRM play, but I was like, sometimes you just gotta know your people. So and you one of those where you gotta be like, all right, I'm gonna let him go touch this fire because he gonna go touch it anyway.
What was the play? What was the play?
So CRM earnings last time. I was bullish on the earnings, but I didn't play it live. I did a straddle on CRM for earnings. And they popped, but they just didn't pop enough. So Chris was a little too far out of the money after the pop. And so that IB crush took him out. But yeah.
Y'all got some y'all different for that. Y'all honor report plays.
Listen. When my plan is you already know I don't mess with earnings. Like I do it maybe 4 times a year where I'm feeling froggy. But with these advanced strategies, once I get more comfortable with them, I'm gonna be all up in Ernest's face. Word. Like a bugaboo. But only certain ones though, but yeah. Facebook user, you're never wrong, cut that out. Shit. Y'all already seeing Trade Masters how often I be wrong. I saw Miss Phoenix said she bought some fractional shares of their dividend payout. Okay. Yes, for me at this point with big tech, these big tech companies doing splitting their shares, I think that the time for growth in big tech or really in the markets in general is gone for now. So for me, I don't buy shares unless they pay a dividend. Generally speaking, because I do have shares of Shop and Shop don't pay a dividend. But that's another story. But yeah, for the most part, if it doesn't pay a dividend, I don't want to own the stock. I'll trade it, but I don't want to own it because if you're not growing the way that I would like for you to grow, what's the point? For me, it's really no point. Yeah, so David, you got any final thoughts? Anybody else got, questions or anything?
No, I'm just gonna be watching long term to see how things shake out and how I'm just gonna kind of keep tabs on that and see what I can see with that. Maybe some bad news come out, maybe some good news come out. You know,
Right.
whatever way it goes, I'm gonna take it.
Right.
I never
Right.
traded in though, so I'm gonna
Me
see how
either.
it is. I may paper trade it or something,
Hmm.
see what it do. And if it move, I don't think it move a lot. So that may be a situation where you may have to just sit on it. You know what I'm saying?
Hmm.
Trade it. So if that's the
Yeah.
case, I'm only looking to swing it. If it don't move intraday, I'm gonna swing it long. And that's if I swing it long, I gotta see it set up because I do not want to sit in no drawdown on a snail trade.
Yeah, man. I feel you on that. I feel you on that. Take 2 months to move $2. That's
Right.
crazy.
I can't do it.
Right. My final thought is, for those of us that are here, I know that a lot of us come into the markets, especially newbies. We have this bullish bias that's just kind of inherent. So if you take anything else from this conversation, understand that number one, your bullish bias, there's always going to be some bullish opportunity in the market. And it doesn't necessarily have to be, what sector or what industry is performing or benefiting from whatever the current narrative is. It could be, this is an inverse ETF that when the markets fall, this one rises, so I can trade calls on that. Because people tend to come in and they be scared to trade puts. And, I understand that was me at one point where, I kind of had to tread lightly when I started to trade puts. We like to have the best outlook, which is why the markets, if you scale it way out, it's always been bullish because that's just human nature. Is we always want to see the best outlook, always forward looking and things like that. So, but two, like we demonstrated here, recession, but there's opportunity in certain industries, and it's just not the travel industry. You could look at some of these value or some of these industries that are bullish when things like big tech is down, when there's a recession, when geopolitical tensions are high and things like that. You can look for opportunities there. But just make it a habit to keep an eye out on the business cycle, any kind of economic news, not just domestically, but also globally. So that's pretty much
I think
all I have to say there.
I think the last 2 years, especially the last 2 years, a lot of new traders who came in, it kind of been easy for them. Unfortunately, I say this, it's been easy for them the last 2 years. Here is where you make a break in
Yeah.
these type of times because the market's not going one way. And if it does go
Hmm.
one way, it may only go one way for a short period of time. So
Hmm.
a lot of the traders in this from I think from for the next 2 to 3 years, a lot of traders may get shaken out of the market if they came in on the COVID market, sitting at home,
Hmm.
not working. They figure out how to trade, and then they think that that's how the market reacts and acts all the time. And I think here and now it's important to really learn the economics and the technicals in this particular market. If you learn how to trade in this
Yeah.
market, once you catch the trend market again, it's gonna be easy peasy. Hell, we might be in one, it just might be in the early midst of one. Who knows?
Right. Right. I definitely agree. Miss Lady L, thank you for pulling up. Would y'all say that the former PM of Japan had a small effect on the market? You mean the man that just got off? Now I haven't dug deeply into that situation, but I made a mental note to check it out. Because I only saw a headline, but the headline was kind of boring, so I didn't click on it. But it's possible. I mean, a big time political figurehead getting killed, it could have an impact, possibly. But I would have to look at the charts to see when that happened and, try to see if there's some sort of correlation.
I think that'll affect a lot more so when you talk about Japan. It might affect if you a currency trader.
Yeah, for sure, for sure. I'm pretty sure. I'm pretty sure. Yeah, the U.S. Japan pair. Matter of fact, I was trading. I was doing a paper trade on the forex side recently on U.S. And the Japan pair,
Why?
and it I got in at like 134, and it popped up to like 136 and pivoted. But this was like within the last no more than a month ago. So I don't know how recent that news was. But yeah, Forex, I'm sure Forex probably had a larger impact there than, the stock market. Because I watch the headlines pretty much almost on a daily basis in the stock market. And I don't even think I saw that cross my headlines. But I could have missed it, but yeah.
You're taught to be bullish from the beginning.
Yeah, that's a good point. And it's not only us being taught to be bullish from the beginning. Human nature, that's how we see things. And that's all that you're pretty much trading in the markets. Even with the algos that trade, humans program the algos.
Right.
So the algos have that same human behavior. They just, they're just able to react faster than a human person could. So um, yeah, that's just something that you have to kind of unlearn through practice.
I was talking to Renata on the one day, and she was telling me it reminded me that the markets are designed to go down. I'm like, you sure are right. It's made to reset currency all the time. So if you remember that, you remember nothing goes up forever.
Hmm.
Yeah.
Hmm.
They got the bull on Wall Street, but it should be the best. It should be
And
the best. Yeah.
that's why retail investors tend to buy at the top and they sell at the bottom because we think that, oh, it's been going up for all this time, and nah, it don't go up forever. What you miss is that it's been going up for the longest. And that reminds me of a trade that I did a few years back on I forget the name of the company, but it's in the same industry with like Jupiter and those companies,
Mm-hmm.
sort of cloud techie based companies.
Yeah.
And I was like swinging it all week, just making bags. And then I got overconfident. I went and did my due diligence. I was like, okay, they literally beat earnings all the time.
Right.
All the time. So I was like, yo, I'm about to bet all this money. I'm about to bet every single dime on earnings for this one because they win every time, every single time. Man, everything that I made leading up to earnings was gone, wiped out overnight. So
Damn.
yeah, I've been burned a lot of times. Well, not a lot of times, but I've been burned enough times messing around with earnings being directional. Because no matter what you do, it's a 50-50 bet. So yeah, that was me, Montez, believing that this thing is gonna keep going
You
because
know, you thought
historically that's what it
it's
does.
yeah. I from talking to a lot of traders who you got a lot of traders who scalp, right, who may want to transition to swing, or swingers who want to transition to scalpers. The
Hmm.
scalpers are the main ones who struggle them out the gate first to swing, because of
Yeah.
the scalp trader. You can take, you can buy on the high or the scalp
Hmm.
and take a scalp out of the next move, whatever. So when they come over to swinging, they use that same concept. I'm like, whoa, this is a higher time frame. Don't just buy.
Yeah.
You're gonna be sick on the bar if you gap down. So don't do that. So yeah, they're some of the ones. They funny when they think they can have, like, nah, this is not the 1 minute chart. It work a little different on the daily chart. So yeah.
Right, for sure. All right, Montez says you may earn in a bull market, but you're first forced to learn in the bear market. For sure. Man, it sound like passive low key, just a little bit.
That might be old pals
Like he
incognito.
got like he got an alias or something.
I'm saying? He got an analogy for you now. Remember
Right. All right, Miss Lady, I appreciate you. All right. They say the market always goes up because a long-term chart appears to do so. What they don't tell you is that the indexes are scrubbed off of bad performance, so it's biased to be up. See, I knew it.
I knew it, Pastor. I knew it.
Yo.
See, hey, you know the lingo, right? You ain't even talking. You know how you write. That's there. You know how you write.
It don't matter. He gonna give himself away every time. Every time. I appreciate you, Pastor. We appreciate you for stopping by for sure. For sure, that means a whole lot.
You got that.
But yeah, we don't even want to keep y'all, all night. But we appreciate y'all for pulling up on this Saturday evening. Hopefully, you guys got some good info, some stuff to watch. I have David's contact information in the description box for those of you that haven't connected with David. So his social media, his email, things like that. Of course, my stuff is in there as well. But anytime y'all would like to see me mark up a chart, shoot me a message. I'll put it on. And whatever else. If you guys have any questions, David, if you want to talk about some of your classes that you have, go ahead and do that.
First, I appreciate you, Pastor. You the truth too, man. You always got some game to give too.
For sure.
I ain't lying. But now, I got some stuff. I might go 0 dark 30 for about a while because I gotta go in the lab and get some stuff.
I feel you.
You know what I'm saying? But I do have some stuff I'm working on. It just takes some time and getting it done. I'm still gonna be trading. I also do markups and things of that nature. Just email me, hit me up. I'm getting to a point where I'm getting my stuff on to platforms to where I won't be so via one-on-one all the time. Well, sometimes people can just get it in bulk and go about their business versus waiting to get to contact with me. But in due time. But until then, any questions or any requests, reach out to me on Facebook, Grinding Mind Trading, Instagram, Grinding Mind Trading, Twitter, Grinding Mind Trading. My email is in the link below. If y'all got any questions or whatever. So that's all I got.
All right, man. David, I appreciate you all the time, man.
No doubt. Anytime.
I like to get up and talk about some charts, man, all day.
You're right. Sometimes I gotta tag myself like that. That's enough. Stop. Go leave it alone.
Right.
Man.
I appreciate you, Pastor, again. Shatavia says, good stuff, y'all. Thanks for this. Laissa, thank you. I had a feeling you was in the cut somewhere. You showed yourself. I appreciate you. All right, Miss Lady L, thanks. Of course, if you have any questions, feel free. I know you. I see you pretty often in my comment section, so I appreciate your support. Chat junkies for real. What's up? Both of us.
Whatever.
I appreciate you, Monique. But y'all, again, thanks for watching. If y'all want to see us do this again, we'd be happy to do that. But we'll catch you next time. Follow us on social media. We always market up some charts and talking about, price action and stuff like that. So enjoy the rest of y'all weekend. Enjoy your night. We appreciate y'all. Have a good night.
All right, peace.